So beware, or I shouldn't say beware, but yeah, beware. That's really good. Beware, you're missing this opportunity. Now that we're toward the end of the 2021 tax season, we're going to go and look at last year and look this year forward through the end of the year about possibly getting, if you had one employee, a credit up to 70% of wages paid. So why would I watch this video? Number one is, if I had an employee, let's say in Chicago, I was paying $15 an hour. So just a little quick math, 15 times 2,000 an hour, 2,080, but let's round that to $30,000. And I paid him evenly throughout the quarter. What would happen is I could get a refundable credit for 2021 of 70% of that, and that would be 70% of 30 or $21,000 in a refundable credit from the IRS. I don't know why you wouldn't want that, Laura.
I don't either.
You know, that's just one employee at $15 an hour. Mm-hmm. What happened if I had 3 or 4? Or let's say, you know, let's say I had somebody that at $40,000, you know, paying them, you know, over a year, that would be at 70%, a $28,000 credit. So this is called the employee retention credit. Again, employee retention credit. You get it through your payroll, your quarterly payroll reports. But in order to get there, I'm going to move this sheet here for a second. I've looked at this situation, and you know, payroll in itself is complex, and I'm a small business, and I write my own check for that one employee, that one at $15 an hour, and I pay them the same thing every pay period, and it's just, I can write the check. But then what I have found out is that out there in our real world, even a majority of the practitioners don't know how to get this credit. And again, it's a payroll credit that's refundable. And for 2021, it's good to 70% of $10,000 of qualified wages per quarter, or a $7,000 credit, and it's a refundable credit. And I can't say this enough, it's a refundable credit.
So you're saying a refundable credit would be me paying my employees, and then however I claim that, I would then get the money back. I have to pay the money up front, and then I get the money back.
You would pay the employee. Yeah, you pay the employee. But then whenever we go to make our payroll deposit, we can use that credit for our payroll deposit real time. So the point of it is we don't even have to pay in that. As long as the refundable credit is greater than the liability to the IRS, we don't even have to make our federal deposits, and they're still considered timely. So that's a great point. So far in this conversation, we're going to do an overview in this video, and then we're going to follow a video at first base qualified businesses, qualified wages at second. Then we're going to come around to how to file, your question, how to file and get this credit. So the 941, we would actually get the money back in our bank account each quarter. But if we need the money, which a lot of my clients do, we file a 7200, and when we file that, we get the money back in a matter of days or a couple of weeks back into our bank account without making the deposit. So our cash flow is instant. Each time we make payroll, that person at $15 an hour, every time a deposit is due, we don't have to make the deposit. And when we file our quarterly report, we first offset our payroll tax liability, and anything over that gets refunded back to us. Again, I know this is very complex, and I think, I'll be very candid, I think that's why a lot of practitioners are not doing it. But I think also there's a lot, because, you know, it's a one-time lift, you know, and I need to know all this. We've been going through tax season. So to me, take this video, tell your practitioner to look at this video, because what happens is, and spread the word. It's your friends, it's the neighbors. I mean, stop and think about it. I'm just a sole proprietor. I got somebody that's working part-time for me, and I'm filing quarterly payroll reports. So I'm filing that. And you know what? I only pay them $10,000 the whole year. 70% of $10,000 is still $7,000 in my pocket. I mean, this is money when I need it. This is real time now. This is not wait until next year on your 1040 tax return. This is now. And you know, maybe I'm getting a little too excited about it, but I get people calling me after watching some of the videos, and they're like, well, how do I do this? I've picked up 5 or 6 new accounts in the last 3 or 4 days. And it's all because I don't know how to do it. I don't know how to do the 7,200. I don't know how to amend last year's returns, because remember, we can go back to 2020, even if we got PPP, because they changed the law at the end of December. So last year, all the videos we did were correct. And even the one we did a complete separate video on don't double dip. I'm so glad we did that, because you know why? If you don't double dip, everything we did over the last year and a half on this pandemic is correct. So my point is, we can go back to 2020, file amended 941s here at third base. And what happens is we can get a $5,000 credit on up to $10,000 of qualified wages on all the employees there, even if we got PPP. For 2021, even if we get PPP. And we'll go through that a little more in depth, but I really want to start, it's springtime, I want to start playing baseball. I won't tell you my favorite team. We won't, Cardinals, the bird, it comes out in the spring too, but no hint on who my favorite team is. Hey, it's a beautiful bird. What can you say? So anyway, so here's what we want to do. We're going to start here on this, looking here at the overhead. This is ERC. So that's Employee Retention Credit. And what we're trying to do is to say, I want my money now. How do I get my money now? I mean, think about it. You pay a part-time person, I just said, $10,000 for the whole year, and I can get $7,000 of it back? I better be doing this. I better be. And if you don't know, if you're a small business out there, it's for any time you have an employee. Anytime you're following that 941 quarterly report, you're available. But then we got to run down here, and I'm going to draw a line here. So our key is when we get back here, our gold. This is our gold. Okay? That's our gold. So we're going to run down here to first base. When we get down to first base, what happens is, are we a qualified business for 2020, and we have it for 2021. And two different sets of rules, but that's where, you or your advisor should know these, and we have videos on it. And we're actually going to come back after we do this overview, and we're actually going to go in and we're going to stop in a separate video, and we're going to do what is a qualified business in depth. And we're going to do this at every base, but you need to, I want to know what's in it for me. So if I was going to go through a 3 or 4 part series, why am I going to go through all this complexity? What's in it for me? Again, I don't know which is a better example. The part-time employee, you only paid him $10,000 over a year, and I can get $7,000. I pay somebody $15 an hour in Chicago, that's $30,000 a year. I pay it over the year. That's 70 times 30 is $21,000. That's for that one employee or one part-time employee. Think about if I have 2, 3, or ever how many. This is huge dollars. I just worked on one for a larger company. It was a 7-digit. I'm talking about over $1 million. So beware, or I shouldn't say beware, but yeah, beware. That's really good. Beware, you're missing this opportunity. So we're here, and what happens is in 2020, it was a fact that for qualified business, it had to be partially or fully shut down by a government order. So that's one. Fully or partially shut down. Well, almost every business in some way was shut down. I mean, we're out here in the rural Ozarks, and every county, every city or town, they had their rules. So if there was any restriction, which there was, that means during those quarters, it's by quarter, but those quarters, that meant for 2021, I would qualify.
And if I missed my ERC in 2020, can I go back as a business and receive those?
Great question. Yes, you can, because here's why. It's because when this all started, you either got PPP or ERC. And we went through the whole year of 2020, and we got to December 27th. And legislation changed the rules and said you could get both for 2020, kind of like driving down the road and looking in the rearview mirror. And that's your question. Can I go back to a prior year? Well, the way payroll taxes works, unlike PPP and the SBA, payroll taxes, I have a time period to go back and amend. So there is time to go back to the pandemic and to amend the return. So here in 2020, the thing about it is that, I've mentioned all these dates. The pandemic started by federal law on March 13th. PPP didn't happen till later in March, and the first money available from SBA was in April and May. So if I qualified the first quarter in 2020, and again, we'll do this separate video on it. Be sure and hit that bell. I always mess that one up, so that as we do these other videos, they'll roll out because there'll be one right after the other. But what happens is between March 13th, so here's March 13th, here's the law change which came about on March 27th for PPP, and then PPP started sending their money out between March 13th and whatever day, if you got a PPP one, it got deposited in your bank account, that's qualified wages right there. So right out of the gate, first quarter, if you're a qualified business, you're almost 99.9% chance that you're going to have qualified wages when we get to second base. But you're first a qualified business because of, one, I've already said, partly or fully shut down because of government, or else the other one, there's an or, and that would be a 50% reduction in your gross receipts compared 19 to 20. So without getting into all the minutia, we're going to have the same thing for 2021. That rule, it changed. Instead of, it was, slightly. One, if you're partially or fully shut down, you qualify for that quarter, and the quarter you requalify. Or if you had a 20% reduction in gross receipts for 2021.
So a lot more businesses will qualify in 2021 than they did in 2020.
Yes, good comment. So rather than stealing all the thunder from the video on how to qualify as a business, let's go on ahead. So let's say for a second, and most businesses should qualify. So now we're going to run down here. So we got by first. Now we're going to go to second. Because remember, we're trying to get a home run. We want our money now. So at second is qualified wages. So again, I've kind of already alluded to that, but qualified wages started when the pandemic was declared on March 13th. So from March 13th all the way through to December 31st of this year, I repeat that, if you're the qualified business and you get through first base, and you're qualified business, then you get to second base, it's qualified wages. And in that video at second base, what we're going to look at is what's qualified wages. And the big takeaway is don't double dip. Mm-hmm. So it's like, I don't know how to do this. Let's just put my arm. This here is the end of 2020. So here's 2020 and here's 2021. Over here we had a PPP that a lot of people got. All those people, for the most part, either they had to amend a return or they've never got, because you couldn't file a timely quarterly report, because up until this deadline at the end of the year, and it's actually December 27th, what happens is you couldn't file for the ERC. They changed, again, as I mentioned at the beginning of this video, they changed this December 27th. So in doing that, now, if you have not gone back and amend your return, then what happens is there's one available. Well, why that's important, and let's just do an example here. I got a PPP. It came out and I got it deposited in my bank account on May 1st. What happens is if I'm a qualified business at first and I come over here to second, what ends up there is that from the time the pandemic happened until that May 1st, if I'm a qualified business, I have qualified payroll that's going to get me a credit of 50% up to $10,000. But I got to go back and amend the return for that 2020, that prior. Then what happens is when I get in 2021, that's where we get that, again, we get a 70% of wages from January 1st through December 31st, as long as we're a qualified business at first. So each quarter we go to a first base and see if we've qualified. If in that quarter we qualify, we go into second and determine our wages. But let's say all of a sudden let's say we qualified in one quarter. The way the law is written is that until we get back above that threshold, until it's either we're not shut down or we've got above an 80% of gross receipts back, we qualify. But the quarter we get back to, let's say that 80%, we qualify in the quarter we get back, because you don't know what's happening. So you get to keep filing the credit real time, including the quarter that you qualified. So let's say quarter, the first quarter we qualify, second quarter we qualify, but third quarter we go over this test that we'll cover in the qualified business section. At that point in time, we still get that quarter that we went over the threshold. So anytime you qualify in one quarter, to summarize this, you will always get one additional quarter. So we've qualified the business, we come to qualified wages. And again, if I was to capture a statement, if you're a qualified business at first, then qualified wages in the big picture is all wages as long as we don't double dip from PPP.
Now, what if I'm a business that already took out a PPP loan and I'm hearing about ERC for the first time and I'm like, I should have got an ERC loan. PPP is not as much as ERC would have been.
Okay.
What could I do?
Okay. So let me repeat the question to make sure, and I always do this when I'm out speaking, I always repeat the question to make sure I heard it. So I've got a PPP in 2021 because I can't do anything about the past.
Yeah.
It's past. I'm a qualified business for PPP and I got the money. And I've actually done this for clients. What we do is we calculate their payroll for the quarters and the periods that they're getting PPP, and we compare that to the credit. And I've actually had clients that say, wait a minute, I should have got ERC and not PPP. If they've not applied, so if you out there, small business, you got a PPP too, or you got 2020, you got a PPP out there and you're spending the money, you can say, if I get a better credit under ERC, I'll just repay the loan and I can still apply for the credit. Because until you apply for the debt forgiveness under PPP, it's still a game. It's still up to your decision. So you're a small business, you should be asking your practitioner or whoever's assisting you, is it better PPP and me ask for forgiveness in 2021? Or should I just say, hey, I'll just repay it because I can get more money from the ERC? And that's going to be a facts and circumstance, case by case.
Mm-hmm. So as long as we haven't applied for forgiveness, we have leeway of what we're going to do between ERC and PPP.
Yes, as long as you haven't, I'll repeat, as long as you haven't asked for forgiveness, you still have the option of making the decision which is better for me. And it comes down to one thing. What is the better cash flow for me? Mm-hmm. You know, I need the money. I'm a small business. I'm trying to stay alive. I'm trying to stay in business. I'm trying to start back up. You know, I need this.
Yeah, and your employees need it because it helps them stay employed.
Yeah, and right now unemployment's starting, you know, around the country to be. It looks like it's going to be reduced, and so the other thing is my clients are starting to expand and bring back more employees. As long as I qualify for this, and it's a quarter by quarter qualifying, then what I want to do, I want that assistance because that's what it's there for. It's to assist you, the small business, to either continue operations or to open up more. And see, there's where right now, if I can go back. Now remember, when we get to third base, we have to, if it's in the past, we have to file amended 941s. If it's in the future, we can either do the 7200 or the 941s. And I kind of like this discussion, I like because what we just did, we need to draw our arrow down here. So we've determined our wages. We haven't doubled, dipped. We haven't double dipped.
Should say no, double dipped.
I love you, daughter. No double dip. Okay. But the point of it is now we know how much wages that are qualified per quarter. Now we're going to come down to third base. And again, remember, this is an overview, you know, and be sure you understand this overview before you go to one of the videos at first, second, or third. Also, when you watch the videos, be sure and go to first to make sure you meet that before you go to second to qualified wages before you go to third. I would love to jump to third, but I could be doing an incorrect request of a refund. So now let's go briefly down here to third base, lay this pin right here. And at third base, there again, this is how we get the money. This is how we get our money. So up to now, we've done all the background work. Are we a qualified business? Yeah, we are. What's our qualified wages? We haven't double dipped with PPP. Now we're at third. Well, if it's prior, and I'll say right now, if you have not filed your first quarter report, then you can file this on a timely filed 941, okay? Right now, I'm filing 7200s for clients because we're wanting to get the money now, even for first quarter of this year. So this is the takeaway. 7200 is a new form last year. We did a video on it. The 7200 is to get the credit faster than waiting on filing it under the 941. So that's future thinking. So 7200s can only be filed during a period of payroll before you file the 941. if we're looking in the past, so we're going back and we go, wait a minute, we went back to 2020 and we realized that we got a PPP, for example, or maybe, if you didn't even know this ERC credit existed, and I'm running into that. There's people that didn't get PPP and people that don't even know about ERC, the Employee Retention Credit. And so I've got two right now. I picked up new clients that were going back because, see, the payroll services didn't tell you. You had to tell them. I've got clients, be very candid, with the big initials, and in doing that, they wasn't telling me anything. So for the clients I'm doing a 7,200 for, I'm having to, if I'm doing their payroll, I know. But when I get done getting the 7,200, because like I told you, I got one client, we're doing it every week. Well, when we get to the end of the quarter, I got to send in to their nationwide payroll service and saying, hey, here's what we got back in 7,200, and there's a line on the 941 quarterly report that they put that 7,200 amount on, so that's where you reconcile it. So the thing about it, the 7,200 is if I need my money now and I can't wait until I file my quarterly report. If I want to wait, I'm not required to file it. There's no requirement to file a 7,200. It's just how fast do I want my money. Once I get to the end of the quarter, then I can only file a 7,200 for the next quarter and the next quarter. So that's kind of the role here. But at third base, we're qualified business. We've determined qualified wages by employee. Remember, second base, no double dipping, and it's by employee. We get to third base. There we're filling out the report because we want our home run at home plate. It's waiting for us. So there what we do is we fill out the 941 or the 7,200, but I'll do the 941. We go through by each employee. We determine which one, the wages and who qualifies. And in doing that, then we determine what our refundable credit should be. That's put on the 941. It first applies toward payroll tax liability. Then whatever is over that is refundable. And that really brings up the next thing is, this thing is all refundable, but you first apply it toward your payroll tax liability, the withholding and the Social Security matching and the employee. So the thing about it is, the thing we've kind of left a little bit out of the discussion is the fact that I don't have to make deposits. So I can go and look at my deposit, and if my refundable credit is larger than my deposits, and even if I don't file a 7,200, when I get to the end of the quarter, I can fill that report out and have not had to make deposits. But that's why you have to make these calculations as you go. So kind of a recap at third in this overview of getting the money, my employee retention credit, the ERC now, is that at third base, we have to look at our payroll and say, is our refundable credit greater than our payroll tax deposit? If it is, we don't have to make our deposit. And this is through December 31st of this year. And we can wait till our quarterly report, file it, and whatever we have refundable above the payroll deposit liability, we're going to get that back in our bank account. But again, if we want to do it each week or each pay period, and you don't have to do it systematically, I can do the 7,200 once a month, every 2 weeks, no matter what my payroll is. It's just when I do it, I have to know what my payroll is. So it just makes sense. You do it, you either do it after each payroll period or you do it at the end of the month. But again, we're just trying to get the money in our bank account now. It's refundable above the deposit. And the way the 7,200 works, you calculate it out, and if your deposits are greater than your refundable credit, then it will actually calculate the deposit for you, and it'll say if the line here is 0, don't file the 7,200. Again, the 7,200 is not required. It's only to get the money faster than doing the quarterly report. And again, you have to do it in the future. I cannot take a 7,200 and go to a prior quarter and get a refund. I have to go back and amend. I have to do, so if I'm looking at the past, a prior quarter, so we're talking about a prior quarter, I like writing, then I have to do a 941X. If I'm looking at the future, then I can do a 941 or a 7,200 to get that advance payment. So I just think this is important because I get people will call me and say, can I file a 7,200 for last year? No. It's for an advance refundable credit, or it's for advance money put in my bank account before I file my quarterly report, which then kind of brings us on down from third, brings us the home run, and that is the ERC credit. The home run is called a deposit in my bank account. It's there. It's money now deposited in your bank account. That's what we want done. So this is, again, to kind of recap, and Laura, jump in here on some of the thoughts you're taking away, because in this, you're a small business, you're part owner in some companies, so you do payroll deposits and all that. So our goal here on this ERC is the home run. How quick can I get the deposit of a refundable credit for payroll in my bank account? Yeah. What's your kind of takeaway?
You just got to make sure that you qualify, your employees qualify, and then you file your reports correctly and get that money faster to stay in business and keep everybody employed.
Yes. I find this, like I said earlier, I've done 2 or 3 live presentations, some of them to practitioner groups, and what I am finding is that everybody's been so busy with the pandemic, and everybody's been so busy with income tax, and everybody's been so busy with the PPP, and then the law changed between Christmas and tax season, and I think that just kind of fell by the side. No, I think with the pandemic going on, this law change, after Christmas, going into the filing season, what happens is I think it just kind of fell by the wayside. So I want to say my big thing is shout out, check to see if it applies to you. If you don't check, you'll never know. And again, whenever I come back to, you pay somebody $15 an hour, you're one employee, that's $30,000 a year for 2021. That could be up to a $21,000 credit in your bank account. Or you're paying somebody part-time and I only paid them $10,000 for the whole year. That could be a $7,000 payment, money in my account. And I don't understand why I wouldn't go through the exercise or get somebody to go through the exercise with me. But the resistance I'm meeting, because this is an unusual law, I'm running into a lot of people aren't doing it. And it's what's going to keep you in business or help to keep you in business. Do me a favor. I want to make sure I hit that bell right. Will you please tell me, because I have people tell me all the time, how do I get this? Because here's what's important. If you want to do this, and if you're a small business, I don't know why you won't check this out. I want to know what's a qualified business in that video we're going to do. I want to know what's qualified wages in that video. Then I want to know how to do my 940, 7,200 in that video so I get my deposit or my home run. So tell me.
All right. So make sure that you have your notifications on YouTube and press subscribe. To the right, there's going to be a bell. Go ahead and hit the bell. And that should give you notifications every time we come out with a new video so you can see it real time. Also, if you're interested in maybe a newsletter, go ahead and make a comment below and let us know that you would be interested in signing up for a newsletter, and then we could maybe email you when we come out with a new video. Yeah,
and I think that's important because, there's times I go for a couple of weeks without something. I want to deliver content and things that impact you. I don't want to do these just because I need to do something. So timely is so important. Thank you. Stay tuned. We're going to see you. Hey, I got the line. We're going to see you all at first base.
Hope this helps.